NVIDIA shares down again once again this morning, sliding about 5% for the week so far. Joining us right now to talk the chip stocks is Vivek Arya, Bank of America's senior semiconductor analyst. Vivek, first of all, what do you think about the slide in NVIDIA chips this week?
Good morning, Becky. So, last week we came from a very successful GPU technology conference the company had. They outlined a path towards $1 trillion of spending in the data center. They really stressed how the computing requirements of these new reasoning models is going up by a factor of 10 to 100 times. And then they outlined a very multi-generational roadmap that goes out all the way till 2028 and spans across their unmatched expertise in hardware and software and systems. So I think fundamentals are rock solid for the company. But what's also happening is there's a lot of geopolitical worries. There's a lot of angst regarding restrictions of their products to China. There is this new AI diffusion rule that is supposed to go into effect. It was put in place by the Biden team. And if it is implemented, and I think if is an operative word, then we could see the effects of this by May 14th when it is fully implemented. So I think the stock is essentially trying to go back and forth between fundamentals that are exceptionally strong and a range of these geopolitical worries, which we think will get priced in the stock by May 14th. And meanwhile, the valuation we think is quite compelling. So we do believe very strongly that the fundamentals will win the day. But over the next few weeks, we have to deal with some of this geopolitical volatility in the stock.
Sales to China, is that 10% of their revenue?
Yeah, their overall sales are about 13%, but about a quarter of that is going into gaming. It's going into automotive, into workstation. Those parts are not restricted. So we size that the part that is in the data center that is exposed to China is about 10% of the sales. And even in that, there are parts of the networking business that are not restricted. So when we get down to it, the 8 or 10% that is exposed to China, it's specifically their H20 product. And what's interesting, Becky, is that even under the AI diffusion rules, there are no restrictions in terms of them shipping this H20 product to China. This is an older generation product. There is competition for that in China from Huawei. So it's a competitive market because it's an older generation product. So I don't think it's a given that all their sales to China will be restricted. But when we go through the sensitivity analysis, even if we take the China sales out, even if we bake in the effect of these AI diffusion rules, we still see that the stock is trading anywhere between 20 to 26 times less than its earnings growth. Versus if you look at the Max 7 stocks, they are trading 2 times their earnings growth. So we think it's compellingly valued regardless. But we understand that some of this, news-driven headline, these headwinds have to get over before the stock starts to stabilize.
More concerning, NVIDIA, the chip maker that's fueling CoreWeave's rise, might be planning its own server rental business in the near future. With $35 billion in quarterly data center revenue and its own cloud platform, DGX, NVIDIA could really shift from supplier to direct competitor, potentially controlling the GPUs CoreWeave depends on. The competitive landscape is also crowded. You got hyperscalers, AWS in there, smaller players like Lambda Labs also in the space. And then you have CoreWeave's financial picture, which is quite precarious. They're projecting $15 billion in cash burn for 2025, carrying $7.9 billion in debt, $15 billion in lease obligations, and their prospectus, which was very interesting, candidly warns about substantial debt, much of it actually collateralized by GPUs. So those GPU assets typically have about a 3 to 5 year life cycle, or shelf life, I should say, and they face accelerated depreciation as NVIDIA continually releases new chips every single year. So you keep buying it 1 year, and then the next year you realize, oh, this might be obsolete, so the value decreases. The IPO will show if CoreWeave's AI compute empire can really outmaneuver NVIDIA's growing influence, hyperscaler competition, and of course, its own financial constraints, guys.
But I'm not quite ready to give in to the overall pessimism that I feel kind of brewing about the AI trade, about IPOs. I don't think this IPO doesn't sound like it's going to do well.
You're looking to buy more NVIDIA.
Right.
You are. But
again,
that stock can't get out of its own way.
But at the same time,
for all the reasons that we just discussed.
I got it. And those are, to me, more technical reasons. When I look at the fundamental reasons, and of course I'm looking at you, Josh, I see a stock that's trading at 24 times forward earnings. And I really don't question that much the 50% earnings per share growth that we're looking at this year.
You think that NVIDIA has been trading lower for technical reasons? It's been all about fundamentals. And it's been one thing after another.
Okay. When I was saying technicals, I meant the technicals of this week just being up, down, tariffs, and who knows what's coming out of Washington. Regarding the fundamentals, I actually think the fundamentals are very much stronger. I don't think DeepSeek is some death knell here. It moves them from large language learning model training to inference, where they probably
Here's
are
the
going
risk
to do
on
pretty
NVIDIA.
well.
Here's the risk on NVIDIA, and I'm long.
This is like the godfather of NVIDIA.
Okay,
That's why I was looking at him.
I'm long. I'm not negative on NVIDIA long term. I'm telling you what I think the risk is right now. This is the part people don't understand. Last summer, a press release went out from Blackstone gloriously announcing this massive infrastructure investment that they were making. And this is where the money comes from. When you hear the breathless reports that CoreWeave has acquired 300,000 GPUs, where the hell do you think they got the money to do that? They're getting the money from these huge pots of wealth management capital that's going into AI infrastructure funds. And Blackstone's not alone. Everybody has one. It's the hottest product for people in my seat to be selling to their clients. It's billions and billions of dollars in debt financing so that CoreWeave can buy all this NVIDIA product. That's great. Here's the rub. If for whatever reason the demand doesn't materialize fast enough to please the investors, then all of a sudden there's less money for the next AI infrastructure fund and the next one and the next one. And all of a sudden CoreWeave doesn't have the capital to buy more GPUs, which is where NVIDIA really, at the end of the caboose of that long train I've described, that's where they finally come out and say, turns out we may not have much more demand for the next version after Blackwell as we thought we did. Everything's still great, but it's a little bit of a dial down. How do you think Wall Street's going to take that? Calmly?
Disastrously.
Well, and here's the thing. NVIDIA is going to be right with their vision of where AI is going, in the same way that all the companies laying broadband and fiber were right 25 years ago. The timing. All that fiber was worthless until YouTube came along in 2005. It took a long time to find a use for all that dark fiber. That's the worry here.
So let's talk about some opportunities, right? And what's interesting to me is NVIDIA is a name that you say now, hey, look, where it is now is really compelling. You list the market leadership, its valuation, and, of course, the growth trajectory. The growth trajectory is the one, I guess, on Wall Street, there's still a lot of folks who don't believe in that growth trajectory.
Listen, you cannot believe in it if you want. All you have to do is turn around and look at the way AI is changing the world, right? Like I said to somebody yesterday, I had this conversation. Has anyone here used Grok? Grok is unbelievable, right? But when you think about the way that AI is going to change the world, and NVIDIA sits right at the nexus of it all. Look what they did to AMD today. They downgraded AMD because of the NVIDIA challenge, right? And so I think at this point, I don't know how you argue against it. Right. And the fact is it is on sale.
You have a couple of stock picks, one value, one growth. You like NVIDIA, you like Target. NVIDIA immediately takes my mind to this CoreWeave IPO, which, well, I mean, what is that? Look at Jefferies down 10% today. You know, this was supposed to be the year of deal making, and all the investment bank stocks ran up big time last year. And it does now feel like we're in a little bit of a holding pattern.
It is, but I don't think we're in one in NVIDIA. I mean, when you think about it, NVIDIA is still the leader in the AI chip space. And I think the AI chip space and the AI space in general is still very much in its infancy. So if you have an industry in its infancy that's not really affected by tariffs, that is going to continue to grow. And by the way, I think NVIDIA laid out, a great roadmap of growth at their GTC conference last week. So there's a lot of industry growth. NVIDIA is a clear leader. Their Blackwell chip is much more robust and efficient than anything the competitors have, including DeepSeek. So I think this is an opportunity. And you know what? In NVIDIA, the argument has always been it's too expensive. Well, it's not anymore. If you look out to 2026 earnings there, it's 20 times. So it's cheap now, too. You can get an industry leader in an industry that's going to grow for years at a cheap price.
Folks, NVIDIA is really, really breaking down, and it looks more vulnerable than ever. But my next guest says this is when you want to buy it. Art Hogan is here. Art here, by the way, was at the time on Wall Street during the original tech bubble. And if he says NVIDIA is a buy, you want to find out why. You will right after this. The launch of ChatGPT, November 30th, 2022, instantly made NVIDIA the most important company in the fourth industrial revolution. You can see the stock right here. It just took off and took off and took off and took off and kept taking off. And of course, as that was taking off, the stock market took off. Well, these days, of course, we know NVIDIA is beginning to struggle here. It's under some key moving averages. And of course, as NVIDIA struggles, the overall stock market struggles. And even now, after proving the detractors wrong repeatedly, NVIDIA now, unfortunately, is starting to look like a prize fighter who won most of their fights, but along the process developed a glass straw. Think about this. Yesterday, this is great news. OpenAI, the stock going to triple the revenue to almost $13 billion. Normally, that would have sent NVIDIA shares exploding higher. But this headline was superseded by another headline. This from the Financial Times out of China, saying that maybe China would stop letting NVIDIA send in the older chips because of environmental reasons. Now, this is just a ploy. They really want them to send in the better chips, but they're prohibited from doing that. So let's just say this went through and they lost $17 billion. Sounds like a lot of money. However, how much is NVIDIA looking to earn this year? $196 billion, take $17 billion from that. Next year, $246 billion, okay, take $17 billion from that. 2027, $238 billion again. So subtract $17 billion from these numbers. Should the company have lost $170 billion in valuation just yesterday alone? Now, I know there are other stories out there swirling around. The stock cannot get up. It cannot get any sort of traction. Well, my next guest says the stock is a buy. So the question, though, is if it's a buy, what's going to spark that Rocky Balboa rebound? Let's bring in B. Riley Wealth Management, their chief market strategist, Art Hogan. Art, I mean, you like this. You also like some other beaten down techs, but let's talk about NVIDIA specifically because this is the one that sets the tone.
It certainly does, and I think all the points that you brought up are correct, right? And it just showing the 3-year CAGR of revenue growth is amazing for a stock that's now trading at 35 times. It's got gross margins close to 72% this year estimated, and it certainly feels as though a PEG ratio of 0.6 has gotten very overdone. The problem, Charles, is, as you know, when portfolio managers are de-risking their portfolios, they're certainly looking at tech, and tech is down, the Max 7 down anywhere between 15 and 20% over the course of the last 4 weeks. NVIDIA is the tip of the spear in that move down. And unless and until we get to a place where it feels as though some of the uncertainty around trade policy settles down, it's going to be difficult not to see this rotation that we've seen, this massive rotation out of tech and into things that are much more defensive, like energy staples and the like.
All right, I hope you're all doing well today and staying calm in this market. The S&P finished the day about 0.3% lower, and NVIDIA finished the day about 2% lower. This is after the slew of bad news we got yesterday regarding NVIDIA, and then the issues today surrounding the CoreWeave IPO. On that note, I want to mention a couple things about CoreWeave really quick before we talk about NVIDIA. First, I do not like buying stocks immediately after a company goes public. Even if a company that I want to invest in is going public, I would rather wait a while before buying due to a couple of reasons. Companies usually IPO at extremely overpriced valuations so that bankers on Wall Street and company insiders make more money on the IPO. Also, I would rather wait and let the hype around a stock die down after the IPO before I consider investing in it. Now about CoreWeave specifically. I personally do not want to invest in CoreWeave, and I think the situation surrounding CoreWeave is somewhat concerning. CoreWeave essentially rents NVIDIA GPUs to their customers. This means that every year when NVIDIA releases a new generation of product, CoreWeave has to immediately spend a lot of money in order to buy large quantities of the new generation product. And to make matters worse, CoreWeave has a lot of debt. And so while I'm bullish on the long-term future of NVIDIA, I personally do not want to invest in CoreWeave. I'm not telling you what to do. I'm just sharing my honest opinion. Now, let's talk about NVIDIA. In the short term, we are having to deal with many pieces of bad news all at once. The Financial Times reporting yesterday that Chinese authorities may bar the use of NVIDIA H20 chips. The U.S. government adds over 50 Chinese companies, some of which are NVIDIA customers, to an export blacklist. Then we get yet another note from TD Cowen, once again claiming that Microsoft is walking away from data center projects. And on top of all these pieces of negative news, we have the uncertainty around tariffs weighing down on the market and pulling NVIDIA down with it. And so in the short term, this is not enjoyable. I'll be honest about that. But at the same time, the lower that NVIDIA's share price goes, the more attractive it becomes as a long-term investment. The fundamentals of NVIDIA are extremely strong both from a financial and technological standpoint. And the long-term roadmap for NVIDIA is very clear. I've spoken about this at length many times in the past. But before the stock can continue to work, we have to first get through this storm of negative headlines and tariff uncertainty. I don't know how long that will take, and I don't know where the bottom is. If NVIDIA were to trade lower toward $100 or even $90 per per share I would most likely add to this stock because the long-term trajectory is just so clear in my view. On that note, I think the problems today surrounding the CoreWeave IPO indicate that Wall Street is very skeptical about the long-term trajectory of NVIDIA and the build-out of AI infrastructure more broadly. As I've said before, I really do think 2026 is likely to be another growth year for NVIDIA, even though many people on Wall Street are currently skeptical about that. I'm very optimistic about NVIDIA's earnings that they will report in May and August of this year, because at one of those earnings reports, we should see a convergence of two things: Blackwell earnings showing up in a substantial way, and NVIDIA issuing next quarter guidance with margins back in the mid-70s. I think if we can get an earnings report either in May or August, where both of those things happen at the same time, then Wall Street would likely feel more comfortable about 2026 being another growth year for NVIDIA, and we could see positive sentiment return to the stock. I just hope that the fear of export controls and the diffusion rule situation doesn't ruin this setup in May of this year. But we will see what happens. Regardless of what happens in the short term, I am bullish on the long-term future of NVIDIA. The hyperscalers are likely to continue buying NVIDIA's latest products in large quantities as long as NVIDIA is delivering substantial performance improvements. As Jensen revealed at GTC, with the introduction of NVIDIA Dynamo, AI factories that use Blackwell will see a 40x to revenue compared to AI factories that use Hopper. With performance increases like this, I think the hyperscalers will keep spending big on NVIDIA's latest products. We have a clear product roadmap from NVIDIA stretching through 2028 with a new product release each year. And NVIDIA has such a massive competitive moat that no other company is even close to breaching. This is because NVIDIA develops across the entire stack, both hardware and software. This means that even if a company develops a faster chip than NVIDIA's, it doesn't really concern NVIDIA because the chip is just one component of the entire system. And NVIDIA is taking a total system approach, driving efficiencies in every component, not just the chip. I could keep going, but the point is that I'm still bullish on NVIDIA long term, and I think the company's brightest days are ahead. We just have to get through this short-term negativity and macro uncertainty first. As I've said in the past, don't let short-term volatility cloud your long-term vision. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.